Joining us now from Stifel's annual Cross-Sector Insight Conference is Stifel Financial Chairman and CEO Ron Kruszewski. Ron, it's good to see you again. How are things? Welcome.
Hey, Kelly. Everything's great. How are you? Good to see you.
Good. I mean, we've gone through a couple of these sort of interviews this year where at first we were in the midst of the January run-up anticipating a deal boom and all of this. You know, your shares were flying, everyone's were last year. Then we had the big correction and the tariff scare. Where are we now?
You know, Kelly, it's like Rip Van Winkle. You and I could go back, and if we just closed our eyes to January and we look today, we'd think like nothing happened, right? The market's exactly where it was at the beginning of the year. And yeah, I haven't really changed. At the beginning of the year, I was cautious. I said, look, the market's trading at 23 times forward earnings. Inflation is sticky. You got to be careful. And then, you know, on Liberation Day, I was on your show, if you remember, and I was pounding the table saying you need to buy stocks at 4,800. Not that I'm right, but we're right back to where we started. And I don't think the risks have really changed. They're what they were in January.
In other words, so it's so funny. I listened to you. I listened to Jamie Dimon. It's like it's in your guys' blood to just come out. You're supposed to be the one saying companies, you know, IPOs and deals and get into equities. And instead, I feel like you guys are always like, careful out there, everybody. Like the bond market's going to crack. You know, the crazy things are going to happen.
I'm not saying that. I remember, Kelly, I was saying buy equities when everyone was panicking on tariffs. I said, this is not the new normal. I was on your show and said, have me back, but you did have me back. So thank you. But look, I think you have to look at where we are. This market was being driven on two things, tax reform and deregulatory. Neither one we've seen yet. And the one that has taken the spotlight that people underweighted in terms of risk were tariffs. So, look, I think that we're going to see clarity in tariffs, the tax bill probably by Labor Day. Deregulation is coming. But from my perspective, I'm just being realistic here. The route to 7,000 on the S&P 500 is probably going to go through 5,500. I think you're going to get a little bit of a pullback here again. And I'm just being cautious, as we usually are. And when I'm right, I like to remind myself and remind you. When I'm wrong, I just don't show up on your show.
Right. No, we all know that. It's not just you. We all know, oh, that CEO's coming on earnings. Oh, that one's not. Okay. Sometimes they surprise us. But no. So I think the reason, I don't know if you just heard part of the last discussion, is to try to figure out, are we heading into a period of economic slowdown, or is the economy actually resilient and fine? And I'm just curious if you can tell us, maybe because of your strong network of all the businesses, you know, you're dealing with the businesses, especially mid-sized, small. This is the front lines of what's happening or not happening with tariffs. And what are you seeing?
Well, you know, I'm seeing uncertainty, Kelly. That's the thing that's causing the most. The reason we're not seeing the rebound in capital markets is there's uncertainty to your cost of goods sold. That means tariffs. If you don't exactly know what your supply chain is going to cost, it's hard to price your product. And there's uncertainty on how the tax bill finally settles out. But look, I'm seeing generally optimism. The retail investors, so to speak, who went through this with really no problem. They didn't panic at all in terms of that. But what do I see? I see a slowing economy, not a recession. And I think you're going to see a pullback on the consumer spending, which is going to impact the market a little bit. So we think that you're going to see a slowdown before you see the market roaring to 7,000. Look, I run a wealth management firm. I'm paid to be optimistic, and I am optimistic, but I'm also realistic. All right.